What is going on, everyone? Welcome back to another video, another day, another dollar with your boy Chris. Here we're gonna be breaking it down. Today we're gonna go over just basically what occurred throughout the day and then we'll get into the daily. But before we do, if you guys do not mind, please leave a like down below, comment something if you're learning anything new. If there's anything I could better explain, please let me know in the comments down below. And for those of you that do stop by, I appreciate each and every single one of you guys stopping by and viewing these videos, as it does boost my confidence and kind of lets me know that maybe I'm helping somebody out there who is looking to learn a little bit more in-depth way of doing technical analysis, as this is a bit more of an advanced way. And if you know somebody out there that is looking for an advanced way of doing technical analysis on larger time frames, such as the 30-minute time frame, send them my way. Send them my link, and expose them to the greatness that is my channel. Anyway, we're gonna get into it today. We got it's gonna be kind of brief. I did not trade today, as it was not my type of day to trade. So yesterday I didn't take any trades because I wasn't around my computer, and then today I was, and then there wasn't really anything that interested me today as far as trading goes. We had probably one of the smallest ranges we've seen in a while over the last several days. Actually, I believe it's like the fourth smallest range of the year, or something like that. So, very small range, kind of wacky early on in the morning. We'll discuss all that here in a minute and more. So I just want to review kind of what I look at in the mornings, as far as how I know when to take a trade and what to take a trade against. So this over on my right hand side is going to be the 15-minute chart, and you can see I have the overnight high and the overnight low marked. One thing to note is the area that is marked in, that is 95.75 and 84.50. The overnight high 95.75, the overnight low 84.50. Now let's look at what yesterday's high of day was. Yesterday's high of day was 94.50. And then the lower portion of that upper distribution that we discussed in yesterday's video. If you do not know what I'm talking about, go back and review yesterday's video where I talked about distributions and single prints. But we were right here at 83.25, right? Was the lower portion of that upper distribution. So you can see all of the overnight we traded in the upper distribution. And I was talking in yesterday's video towards the end that the most positive thing for buyers is to open up and trade in the upper distribution. Buyers did not want to see us pull back into any of these lower distributions, as that would mean weakness is starting to hit the market. But overall, very strong day. We got into the 4,600 level. We got above that overnight high, could not take out the overnight low. We didn't even get near the overnight low when we pulled back, even late in the evening. Didn't get near the overnight low. So just showing the strength of buyers, and we'll discuss that and more here in a minute. But just showing you the power of knowing where things like distributions are, your previous high days, definitely something you want to have marked. Knowing where single prints are, especially if you're someone who trades the overnight session. You can see how we pulled back to 84.50, and then that single print started. So if I were to pull up destinations, you can see how each one of those time frames got near where that set of single prints were, and then bounced several times off of that area. So great opportunities for people that traded the overnight session to get long. And then ultimately, if they felt like holding to get above previous day's high, they made bank. So let's get into what occurred today. Today was a bit of a rotational day. As some of you might discuss, it was a very choppy day. For us in the profile world, we'd say it is a rotational day. We created a large point of control, a wide point of control that ended up being right here at J's high of 96.75, and we'll discuss that in more detail in a second. But one thing to note is we opened up above the previous day's high with a gap, very small gap, but we opened above the previous day's high with a small gap, drove straight up, and then began to one time frame up in B period. Now, a lot of times you can expect the market to not really go trend right away, so you can fade a new high and usually get good results. And in today's session, you got a really good result if you faded the high at '08. Now, normally people would be like, you shouldn't be selling up here, but nothing in the morning has quite told you that you're going to go trend, and going trend like we did yesterday is more of a rarity than anything. So typically you would pull back and get a good risk reward short to the downside. However, whenever you do pull back, it was a great long opportunity. You had a few opportunities to get long in C period as you did bounce and then push back up before getting a bit of a liquidation break after we took out B's low. Got a bit of a liquidation break. This thing spiked straight down, setting a low in the day, and then getting the initial balance low, and that initial balance being between the first two time frames, high and low. So if you were to take the lines here and draw a line here and a line here, that would be known as your initial balance. Between B's high and A's low, that would be your initial balance. And you can see how C period couldn't quite take out the initial balance high, right? Couldn't take that out. So we rotated over and then took out the initial balance low, giving sellers something to kind of lean on, and then giving a hint that today might be a bit more of a difficult trading day, as at this point, whenever you spiked lower, you dipped your toe into the lower distribution, giving buyers that didn't have an opportunity to buy at the open an opportunity to buy at a better price down here, as well as anybody that did fade that new high to get out of their position, creating a bit of demand in this area. So what a lot of people might have on their charts may kind of look like this, right? What I'm about to do, what you see a lot of novice traders or just kind of basic retail traders, what you'll see them do is you'll see them just kind of highlight this area as an area of demand, right? So what you would say is we pulled back in demand in this area. For me, the way we say it is we pulled back into the upper distribution from the previous day and then got rejected out of it, which is a positive thing. So it provided a great buying opportunity here. So sellers did have something in their checklist, but buyers had more, right? We had taken out the previous day's high. We had value that was completely higher. For those of you that don't know what value is, let me get rid of these lines real quick. For those of you that don't know what value is just where 70% of the day's volume and price was traded in. So value was higher, and you can see that by the blue brackets here, just from a study that I have on Thinkorswim. So you can see value was clearly higher, and it has been going higher for the past several days. 1, 2, 3, 4, and 5 days. Value continues to climb higher, so buyers continue to have something in their favor. We had taken out the previous day's high. We initially had begun one time framing up, but that got stopped in C period. So we pulled back into the previous day's range and then got rejected out of it in D period. E grinded higher. Then F, guess what? Sets a new high on the day. And because you take context, right? We didn't go trend in B period. What some people would be looking at is this area now as an area of resistance, right? They would have it looking quite like this, right? It would be an area. Oh, that's quite dark. But anyway, you get the point. This would be like known as an area of resistance, right? So as we pushed up, you could have faded a new high on the day, expecting us to not go trend because we couldn't do it in B period. We couldn't do it in C period when we set a new low on the day to the downside. So when we came back up, great opportunity for anybody that bought down here at the lows or in D period above the opening to get out of their position, creating some type of supply. And then for those that are looking to get short, to get in the market and create supply. And then guess what? You got paid really well as it was a reversal bar back to the downside. Now at this point, we have identified what is known as a rotational day. You have, let me readjust this real quick. You have what some people would know as supply up here and then demand down here. And there's nothing wrong with using those terminologies. However, it is not as precise as I'd like it to be. So that's why I use the terminology and the reference points that I do. But essentially, you created a channel, right? You had supply up here, demand down here. And each time we got near those areas, buyers stepped in down here. You got a nice little bounce out of it. And then as you rotated back up near the highs, you found sellers and then pushed back down. So we might have had a few time frames where we consolidated down here at the lows and battled that 4,600 level, which we did for majority of the day, which is not a bad thing for buyers, right? We want to find some type of consolidation and confirmation that price is being accepted. But we create a Y point of control. Now, what do I mean by creating a Y point of control? Well, if you look at each one of these time frames, there are 13 time frames. There are 13 time frames that I have labeled. Each one of these time frames being 30 minutes long. So from A through M, there are 13 time frames. Now we look at where the widest point is, or where we consolidated the most and at what price. So up here we have 1, 2, 3, 4, 5, 6, 7, 8, right? 8 points that we traded between 46.02. Okay, so we can keep that in mind. And then you go down here where my study already has it marked. You can count with me. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 points that were traded between 96.75. So it's 10 out of the 13 time frames traded right here at 96.75. And then you have 1, 2, 3, 4, 5, 6, 7, 8, 9 points that traded at 98.50. So the widest point, or the area that we traded at the most, and you can kind of see that where the volume is the highest, was right here at 96.75. So that would be our wide point of control, an area where we consolidated basically above the previous day's high, battling that 4,600 level. Very positive for buyers, to say the least. So each time we rotated down to the new lows, you could have taken longs against the low, right? Using M's low down here as your out. So, I mean, you're risking a few points to the downside, 6 points, to rotate back up into 98 area. So you're, taking about 6 points. Not the best risk reward, and that's usually what comes with a rotational type of day. You don't really get the best risk to reward ratios on rotational days versus days where you have pullbacks and sets of single prints like this that give you better risk reward trades. Typically why I do not trade days like today. So hopefully you guys followed and understood there. But basically, selling point up here, selling point up here, selling points here and here, right? Selling point here. Gave you some good opportunities to rotate to near the lows if you were patient. Good buying opportunity here. Good buying opportunity here. Good buying opportunity here on the new low. And then a good buying opportunity here in K period, right? So a few good opportunities to buy and a few good opportunities to sell. Overall, there were opportunities to take trades today. Now, you do not want to be taking trades in the middle of all this mess, right? You don't want to be taking trades here at all, right? Anywhere in that area, you don't want to be taking a trade. Why? Because that is just where information is getting jumbled, right? You don't know what's going to happen. You're in the middle of the trading range, and that's where a lot of traders tend to get chopped up. If you're someone who is patient and smart, you're waiting for the rotations to the extremes or the edges of the range where better risk reward setups are displayed. So just keep that in mind next time you have a bit of a rotational day and you're someone who struggles with that. All right, let's go ahead and mark today's destinations. I'm gonna mark today's low of day down here at 83.50, and then note how we never visited that set of single prints, and we really never even traded much inside the day's range, the previous day's range. There are 1, 2, 3, 4, 5, 6, 7, or 6 time frames that we pushed down in here, but really never spent much time in it as we rotated back above it. So a very positive day for the buyers. It may not seem that way, but we did set another yearly high. So positive. Okay, so there's our low of day. Now we're going to mark our 10 wide point of control that I identified, right? And if you guys want this study, just leave me a comment down below and I'll leave a link to the study or my trading setup here for you guys. 10 wide point of control. Oof. Can't type today. All right. 10 wide point of control, we'll highlight that. So that is an area of interest now, right? That'll act as a magnet. Our last wide point of control that we've had is down here at 4509, basically where the 4500 level is, a whopping 90 points away, a 9 wide point of control. And if we ever did get some acceleration to the downside, that would be a magnet for us to go visit at some point in time. Same way, if we open below today's low of day, can't get much into the middle distribution from the previous day, we'll rotate back up and trade at 96.75. All right, now we're going to mark today's high of day at 09.25. And then we'll review our daily chart because nothing has changed on the weekly or the monthly, and nothing will until something begins to change in our shorter time frame, which is the 30, and then in our daily time frames. So let's go over some scenarios real quick. If we open up above 96.75 and cannot take out 46.09, today's high, you would look to rotate back through 96.75. So say we open up right here at M's high at 603, we can't take out 609. You'll rotate down to 96.75. It becomes a target to the downside. And then you would look to trade at 45.88.50. You get that, then you would look to trade into the middle distribution. Now, on a push up like we had yesterday, how these single prints were something to lean against for buyers, it becomes an area where we will backfill. You would look to fill in that gap. So if you take out 45.88.50, algorithms and short-term traders would target to fill 83.25 down to 80.75 and then test this middle distribution. If we open up below 45.88.50 and 45.96.75, we open up below that 96.75 and we dip our toe into that lower distribution and can't get much for it, you would look to rotate up to 96.75. So say you get down into right around 69.75, don't get anything for it, you would look to rotate back up to 96.75. So from 69.75 to 96.75. Pretty good risk reward trade in my opinion. You would just put your stop here at 66, you risk 3 points, you're wanting to come back up to 96, gain of 30. So let's look at our larger time frame. And for some reason, I tend to make these videos just absolutely long. I like to ramble and get in depth. Good volume today, not bad for volume. Bit of a doji at the top here. We'll see. Are we starting to get overextended? That is a good question. But until the daily something changes on our daily time frame and we come back into some type of balance on our daily time frame, meaning we take out a previous day's low, nothing is changing. Buyers are still happy pushing this market up higher. We continue to get reasonably good distance. However, today was a very small range. And let's see what happens at this 4600 level, right? Do we take out today's low tomorrow, bring ourselves into some type of 3-day balance, and chop around for a little while? Nothing wrong with that, as it is earnings season, and we got all these earnings coming out. However, this market could easily continue to grind higher as it has been doing, and keep in mind, my next destination for us is up here at 46.31, March's high from 2022. So with that being said, ladies and gentlemen, I hope you all have a wonderful day. Thanks for stopping by. If you made it this far, please leave a like down below, share, and comment something nice. I'll catch you guys in the next one. See you.